All across the global economy, capital is migrating toward artificial intelligence with a speed that has caught many traditional institutions off guard. One clear signal of this shift is the sudden dominance of the .ai URL extension, which has replaced the standard .com as the default marker for new tech ventures. This specific country code belongs to the Caribbean island of Anguilla. As companies flood the market to register these domains, the island's treasury is collecting tens of millions of dollars in registration taxes. This represents a distinct form of structural positioning, generating significant sovereign wealth simply by holding a coordinate that the digital economy now requires for its branding. As this capital concentrates in the infrastructure layer, the requirements for the standard corporate workforce are undergoing a reset. In a traditional marketing agency, generating ad concepts and client presentations used to be the primary output for a 40-hour week. Today, generative engines can produce that same volume of work in minutes. For most employees, using these tools is a mandatory survival mechanism. Integrating AI into a daily workflow is what keeps a worker relevant in a market where the baseline for output speed has been permanently reset. Operating at the same linear pace as last year creates a situation of negative yield, as the value of raw human labor hours continues to be compressed by automated competition. While some use these tools to preserve their current roles, others are using them to decouple their income from their biological hours. Consider a developer who once maxed out at 2 clients. Using AI coding tools, they now handle 10 retainers simultaneously. This leverage lets a single founder replace entire departments. Automated funnels handle marketing, data tracking, and 24/7 service delivery. The gap between a solo operator and a traditional firm has narrowed. In this environment, scale depends less on the size of a payroll and more on the effectiveness of a software stack. This expansion is accelerated by natural language development, where users describe software architecture in plain English to build functioning applications in seconds. This has led to a surge in single-purpose micro-apps, utilities like automated video clippers or niche wealth trackers that capture subscription revenue with almost zero manual oversight. These applications, however, are almost all built on top of a centralized digital utility grid. Every time a niche app processes a request, it pays a fee to a core base model provider like OpenAI. This includes Google's Gemini, functioning as the primary infrastructure layer, taxing applications on its framework. Controlling this foundational intelligence layer creates a mandatory toll booth that captures a portion of nearly every transaction in the AI economy. Beyond the software layer, this entire system is bound by the strict physical requirements of advanced silicon manufacturing. This leads to ASML, the only company on Earth capable of manufacturing the extreme ultraviolet lithography systems required to etch the world's most advanced microchips. Those designs are sent to TSMC, whose fabrication foundries possess a massive technical lead in mass-producing high-performance silicon that has yet to be replicated. Finally, Nvidia provides the compute layer. Their specialized chips are the mathematical bedrock for almost every deep neural network currently in training. The highest sustained margins belong to these hardware monopolies. They capture a portion of every dollar moving through the gold rush because they own the literal ground the industry is built upon. Translating these macro trends into personal wealth requires a plan that accounts for your current liquid assets. If you hold less than $100,000 in liquid capital but have a stable corporate salary, your focus should be on capital preservation and steady accumulation. Use these tools to maximize your efficiency at work, protect your primary income, and funnel every dollar of excess margin into market indices and hardware infrastructure equities. If you have zero capital but possess uncompensated hours, your strategy shifts toward building high-leverage assets from scratch. Spend your time mastering a technical skill, like natural language software execution, to build a single, automated digital asset that generates recurring yields. The economic baseline is shifting rapidly. You have to decide today whether to remain a passive consumer or to begin engineering a system that uses this leverage to your advantage. Secure your position. Hit subscribe and type "future" in the comments to signal that you're ready to start building. We'll see you in the next masterclass.